morning. You're watching Market Fatafat right here on ET Now. I'm Mubina Kapasi, the show where we flag off all the big buzzers in trade. Well, talk about the markets and quite a rebound from the day's low. We are back above 11,750. The Sensex is gaining 100 points and 39,200. In fact, no, 39,100 in fact is where it's trading. The small cap index is finally showing some bounce, so it's a little over 0.5% of gain seen today. Let's introduce then our guests who are going to be joining in on the show. Soumya Sharma, as always, on the research side. We have Kunal Bothra as well joining in, and Kunal Rambia of the streets right here from our studios. Thank you for joining in, all of you. Let's go across to the very first stock. Soumya, let's start off by talking about auto sale numbers. Aisha's Royal Enfield numbers this time around have actually not done that bad.
Well, yes, talking about the overall Aisha numbers, they declined but pretty much were in line with the expectations. However, they reported a weaker than expected tractor volumes. For Royal Enfield, the sales were down by over 17% to 62,879 units compared to 76,187 units a year back. Well, according to the ET poll, we expected the numbers to be at around 62,700 units. So they were a little above than what we expected. So they were pretty much okay, the number as such. Even the exports stood at 3,742 units, up by over 140% compared to the last year.
Well, you know, two-wheelers this month have not been that bad. It's the four-wheelers really that have borne the brunt, and we're going to take you through all of those numbers as we proceed on the show. Okay, Britannia, meantime, is losing today in trade. And remember, it was not losing in the first part of the trade. It's only in the last few minutes that we've seen this downward trend come in for the company. Revenue is in line, but margins is a concerning point. It's actually started to taper this quarter onwards. The management also said that just like the other FMCG players, they too had a little bit of trouble when it comes to growth in the months gone by, but they do expect a revival. Credit Suisse still has an outperform over here, as they believe the pace of innovation will be strong for the company going forward as well. More from the auto space, Kunal Bothra as well joins in. Kunal, Ashok Leyland's numbers were, well, it was pretty good. No complaints on that front. And after many months, Ashok Leyland was able to deliver a good set for its monthly sale numbers. On the technicals, how are you looking at this one?
So, I think except for today, the last 7 days, the stock had gone, on a consecutive downward spiral. I think, if I'm not wrong, from 96, 97 odd levels. The stock had, corrected till 85, 86 on, Tuesday. So, when you see such a, a sharp price correction, the indicators tend to go into extreme oversold territory, and I think which is where you've seen the bounce, panning out for Ashok Leyland. So this should be a short-term bounce, and the bounce may see some bit of more upside. So for anyone who's looking out for, Ashok Leyland, I think, or someone who's already bought at lower levels of 90 or sub, 90 levels, I believe you can hold on for another, 4 or 5 rupees upside. 95 should be in the next target for Ashok Leyland.
Okay. Well, more from the auto stable. M&M, meantime, again, Soumya, not that great a set.
Talking about the total auto sales number, this stood at 43,721 units, down by over 9% compared to last year. Well, this is due to the elections, general elections, and owing to this, the numbers were down. Even the tractor sales were down by 8%, standing at 28,552 units. Talking about the domestic front, the tractor sales were at 27,495 units. Even they were down by 8%, and the entire domestic auto sales was also down by over 8%. Well, as far as management is concerned, they say that say post-elections, they're expecting some amount of revival in the consumer demand, which would probably fare well for the company. Stock slightly higher by over 7%, 0.7%.
Okay, that's M&M for you. Okay, set of numbers. Kunal, Motherson Sumi has been in the red, and I suppose it's the aftermath of what's happening in the entire auto space. What would you recommend viewers do with this one?
Right, so if you look at the Motherson Sumi last entire 6 to 8 months performance, this stock is not been able to surpass 200 days exponential moving average on the higher side. Recently also it took the resistance of around 160, 165 mark. The last ray of hope for the bulls in case of sideways consolidation is 140. If the stock manages to fall below 140, I think we are heading for 130 to 125 kind of mark.
All right, 142 for now for Motherson Sumi. Again, auto numbers. Maruti, April sale numbers are at 1.43 lakh units, a decline of 17%. And again, below the 18-hour poll as well, which pegged the number at 1.5 lakh units for the month of April. So the disappointing set of numbers for Maruti continues, and hence the stock price as well continues to go lower. Though, mind you, look at the way it's rebound from the day's low, and now is in fact just lower by 0.16%. Continuing with the countdown then and moving away from auto, Kunal, what is it that you're witnessing in a BEL? It's now at 89.
So on the hourly charts, the stock again, just like Ashok Leyland, the stock was correcting from 100 levels, 102 if I'm not wrong precisely, till almost 80-85 levels. Now again on the hourly charts, indicators have gone to the oversold. But what's more, in terms of additional topping to the stock price, indicators is the bullish divergence on the hourly charts for RSI compared with the price, and I think that's one standout feature for the stock on the short-term time frame charts, and which is why I expect that this short-term rally which you're seeing on BEL today should last for some bit of more time. 94 could be an immediate target for the stock, and stop loss could be kept at 86 for the fresh trade.
All right, 2%. Okay, 2% higher for a BEL. All right, you know what? Let's also just take a bit of a pause on market Fatafat and address earnings. We have had Raymond that has come out with its Q4 numbers. You do have the numbers which were okay because you had an 11% rise on the top line. Profits were higher by 24%. But look at the way the stock has fallen. It's quite a decline witnessed over there. So let's understand what went by in the quarter for Raymond with Sanjay Bal, the CFO of the company. Mr. Bal, thank you for joining in. Let's start off first with the branded apparel business, because that certainly has shown good growth. Which channels and or brands were the key revenue drivers for Raymond in Q4?
So, if you take a drill down of the levers supporting the branded apparel segment, if you see the 4 power brands that we have in the apparel menswear space, all have seen very aggressive growth in last quarter. The second half of the year, quarter 3 and quarter 4, we've seen resurgence of growth in all our power brands. Our Park Avenue has grown by 20%. Raymond brand has grown by 22%. Parks is again 21% growth, and Color Plus by 11%. So if you see overall, our revenue growth across our power brands has been very significant. Overall, quarter 3 growth was 17%. Quarter 4 has been 22%. So a good aggressive revenue growth supported by really a strategy for offering full wardrobe solutions across our 4 brands, and that is the product quality and the product extensions that we are now offering to consumers is what is helping us achieve this revenue growth, which is much higher than what the average market growth has been as well. This revenue growth, the heartening feature of this is that it is supported by profitable growth as well. So our EBITDA margins, in fact, in quarter 4 were around 7%, and overall we closed the year at 4.1% against 1.6% last year. So we had stated our intent that we will pursue profitable growth, and we had a roadmap to profitability, achieving double-digit EBITDA margins in branded apparel, and I'm happy to state that we are on course to achieve that. That you mentioned, we saw very strong same-store sales growth in our EBOs, which was close to 6.9% for the quarter, and a very strong growth in our MBO segment, where we have expanded significantly.
All right. Mr. Bal, let's also talk about then the strong margins that we've seen again in the branded apparels business. What would you attribute that to? And going forward, how do you plan to sustain it to stay at these levels?
So the focus will be on, again, offering full wardrobe solutions. So we basically have offerings for our customers across what we call work, celebrate and play segments. These are more lifestyle offerings that we are giving to our consumers through our brands, and we will increase the offerings in these categories, in these segments within our brands that we have. What we also have successfully launched is our foray into ethnics and ceremonial wear in the menswear space, and that has been very well received by the trade and by consumers. And we believe that will add to revenue growth and profitability as well in future. And we will be looking to scale this business up significantly.
Okay. What's been the contribution from the Amravati plant? And we did see, robust like-to-like growth as well in the cotton shifting business.
So Amravati, we had invested to really help us to improve our margins.
I've held one more. I've held
shirting business. We invested in 4 million meters of capacity of linen manufacturing. And we are happy to state that we are one of the best producers of linen in the world. Our quality is far superior to what is being offered in the market, and that is helping us get better realizations. The Amravati plant is working at full capacity and full efficiency, and the results are a testimony really to the efficient working of the plant and the product quality that we are getting.
Okay, and of course, the update on the real estate project. What's the sales like so far, and any expected growth over the next few quarters?
So real estate, as we have been mentioning that we have a plan to monetize our land assets, and the launch of a real estate last year was really a very successful launch, if I may say. In the soft launch itself, we've had 400 plus bookings. We have 2.8 million square feet on offer, close to 2,800 flats in phase 1 of the project. But the launch itself has been very successful. A public formal launch is expected in the first week of May. The soft launch has seen very good traction, and we are very hopeful that this project will generate high returns for us.
All right. Segment-wise, the textile segment saw good sales growth. Would you attribute this to the volume growth seen in the Raymond shop, and what other factors drove this sort of growth?
Yeah, so the branded textile grew by 9%, and this is the flagship business for the company. We saw a volume growth of close to 7%. And this is really across the different categories that we have within the branded textile space. Our shirting business grew by 13%, and we clearly feel that the innovations that we are doing, the product innovations that we are doing, is really the foundation to the growth. So the growth is underpinned by all the product innovations and the channel expansions that we are doing. Our MBO channel and the TRS channels have witnessed a growth of very strong positive growth. The wholesale channel was a bit subdued, but more than made up through the MBO and through the TRS channels.
All right. Mr. Bal, appreciate you joining in on ET Now. Thank you for sparing time and helping our viewers understand what went by for Raymond in the fourth quarter. Quick break right here on the show. Come right back. We'll continue with the countdown of the big movers and shakers. This is Market Fatafat. Welcome back. You're watching Market Fatafat on ET Now. Let's get going with the countdown of movers and shakers then. And Kunal, HDFC Bank, record highs again for this banking major, despite whatever the banking index may be doing. What would be your view here?
HDFC, it has never come in the downtrend itself. Entire 2018, when the fall came, it could not even reach the previous bottom. So this is a stock to add on every bounce and every trigger. So for time being, the trigger comes at 2350. Keep buying this counter 2350. For traders, can keep the stop loss of 2275. Expect the target of 2450, 2500.
All right. Moving on to the next stock, and that is Ambuja Cement. Soumya, how are the numbers?
Well, talking about Q1 of calendar year 19, it was pretty much disappointing on volume growth and operating matrix. The revenue was merely up by over 2.3%. PAT showed an improvement of 57%. Margins contracted from 17.7 to 15.8%. Well, however, despite all of this, the management was optimistic of the future outlook on growth. Well, as far as brokerages are concerned, Nomura is maintaining a buy with a target price of 295 per share, whereas Goldman maintains a neutral stance with a target price of 244 per share. So mixed reactions coming in for the numbers, but on the operating front, they are pretty much disappointing due to the lower subdued volume growth.
All right, that's Ambuja Cement, still higher by 1.25%. Kunal, let's talk about HPCL as well. Decline seen over there despite what we are seeing in crude prices. Your view?
The stock was in decent consolidation, but now again the consolidation is getting formed into inverse head and shoulder formation where the neckline is placed at 292, 295. 292 was the previous high, and today also the stock made the high of 292 and it has come down. So by any chance the stock manages to go about 292, 95, it's a good buy, but for time being you can short the counter and expect the stock to reach 265, which is 200 days exponential moving average.
Okay, let's also talk about then TVS Motors. The Q4 sales were in line with estimates, as is always the case, but profits and margins were below expectations. Citi as well has maintained a sell on the back of that with a target at 486 rupees, as they are saying that that's the disappointing factor, the profit and the margin figure. However, the outlook for FY24 then does look still a little pleasing. The stock price is below expectation, the stock price is declining. Of course, do remember we are waiting by for the April sale numbers as well for TVS Motors. Kunal, what is making you optimistic on Lupin?
So I think Lupin is nearing a breakout level. This 880, 885 has been a nagging resistance for the stock for quite some time. But looking at the quarterly charts, the monthly charts, where the indicators have given a breakout, there is a double bottom pattern also in place for Lupin. So looking at the longer term prospects, I believe that this minor hurdle could be taken out for the stock. So I would suggest a buy on Lupin above those levels for a target of 925 plus and stop us at 850.
Raymond, we just interacted with the management. Soumya, the stock price is down.
Talking about the sales number, they were just up by over 11%. PAT reported a growth of 24.2%. Even the branded apparel segment sales were up by 21% compared to the previous year. In fact, the company is maintaining that they will have a good sales velocity in the coming quarters. However, the stock isn't reacting to the numbers. In fact, they're falling. They're down by over 3.3% today.
All right. Next stock on our radar is Tata Motors, the big nifty loser and among the auto space again. Kunal, your view?
From 140, 145 bottom, the stock has continuously rallied to around 240 levels. It has, I feel, the stock is coming down to retest the breakout level, which is placed at around 205. This can be a good bargain buying counter. Keep buying near to 205 for traders. Keep the stop loss of 195. I expect the counters to make higher top, higher bottom and reach 245, 250 mark.
All right, Bombay Dyeing as well is another big buzzer today in trade. What a rebound witnessed. Remember, the stock price had been falling for the last two trading sessions, but today we are seeing gains of more than 7% being clocked in. In fact, it's one of the top Nifty 500 gainers as well. So a rebound after a two-day fall. The stock price is trading near the 50 DMA, and of course, don't forget we have the fourth quarter numbers as well that are expected today. Kunal, PNB, how would you view this one? This stock too is seeing some volatility for the last few trading sessions.
So if you look at the PNB, again, broad consolidation pattern, the breakout already came in, the stock made a high of 100 levels. It has come to retest again the same breakout level. I would buy the counter near to say 83, 84 mark. Keep the stop loss of around 80 levels itself and expect this counter to reach 100 to 105.
Alright, Soumya, how are the numbers for Shoppers Stop?
Well, pretty much mixed set of numbers for Shoppers Stop. Sales were down by over 7%. PAT reported a degrowth of 28%. On the EBITDA front, it improved by over 14.5%, whereas the margin saw an improvement from 6.1 to 7.5%. Although the stock is reacting negatively and is down by over 2.4%.
Okay, well, let's flag off more result reactions. Then Canfin Homes as well came out with its fourth quarter numbers. NI front, okay, 14% growth at 150 crores, but I think on the bottom line disappointed because there was a decline of 9.3% and it came in at 67 crores. But the stock certainly spiking up 5.5% higher. Kunal, Jindal Steel, and this is something among all the metal counters you're flagging off. What is it that you're observing and what makes you optimistic?
The overall thesis here, Mubina, is that many of the metal stocks are trying to make a very solid comeback. Now, whether it's Jindal Steel, and most of the other large cap names as well. For Jindal Steel specifically, the stock has bounced from its 89 exponential moving average on the daily charts. The bounce seems to be more sustaining because it's been followed up by strong volumes. So I expect that the stock, which has risen for almost a third consecutive day today, should rally from current levels as well. 180 is a breakout, a short-term breakout for Jindal Steel, and the stock could rally to almost 188, 189 levels.
Okay, there you have it. That's the view on a Jindal Steel. 0.4% higher. Kunal is optimistic on metal names. But we're out of time on this edition of the show. So thanks to all of you for joining in. Kunal, Rambhaiya, to you for joining in from our studios, and Kunal Bothra and Soumya Sharma to you as well. We'll wrap it up. Coming up next is Markets at Noon.